All right. Well, let's get started. It's so nice to see so many faces. I love it. It's very exciting. So hello, everyone. Thank you for coming to today's roundtable with Spencer's distinguished honorees, Peter Garvey and Mary Roth. We're very excited to be able to hold this roundtable, and we're very much looking forward to hearing from them, and of course from our Spencer scholars here today. Just a few general comments before we introduce everybody. This roundtable is being recorded, and it will be available on our website after the event. We encourage everyone to introduce themselves, as I mentioned in the chat, your name, where you're calling from, your company, your organization, or your university. We will be taking questions from everybody in the audience throughout the roundtable, so we encourage you to share your questions in the chat. You don't have to wait till the end. If something pops up in your mind, please put it in the chat. Don't be shy. And speaking of shy, obviously we want to see your faces, so please turn on your cameras. So it would be great to see you. So for those that aren't familiar with Spencer, or maybe you might need a light refresher on who we are, we're the Spencer Educational Foundation, and our mission is to fund the education of tomorrow's risk management and insurance leaders. And we do that through student scholarships, internship grants, grants to universities to fund experiential learning opportunities, as well as course curriculum development, which is very important to us. And this roundtable discussion is part of Spencer's current fundraising campaign, Funding Their Future, which you may have seen on social media or you get our newsletters. Our Funding Their Future campaign launched on June 15th, and it goes until September 15th. And we're aiming to raise $1 million so that we can fund all of our various programs and continue to give back to future industry leaders. And it's also honoring Peter Garvey and Mary Roth for their tremendous dedication to supporting the next generation of risk management and insurance professionals. So if you want to read more about the campaign or how the donations impact Spencer's programming, you can visit our website after the roundtable. And if you would like to donate, you can do that directly at spencered.org/fundingtheirfuture. We'll put the link in the chat so you can have that. So without further ado, I'd like to introduce everyone here that is currently being spotlighted. First, I would like to introduce our Spencer staff. We're a small but mighty team of 3, not including obviously our wonderful board of directors. They obviously help tremendously. So we have Megan Miller, who is our the foundation's executive director. You can see her there. And then we have Rachel Eblin-Drabala. She's Spencer's program manager, and maybe some of you have seen her lead Spencer's webinars this summer. And she helps manage all of the programs that I had just mentioned. So thank you both. And then I would like to introduce our 2 Spencer scholars that we have today that will help be moderating the discussion. We have Curavilla James. He's a 2021 Spencer Zurich Scholarship recipient, and he's entering his senior year at Temple University, studying risk management and insurance. Curavilla is currently an underwriting intern at AIG within their multinational line, and he's also an active member in the GIS Sigma chapter at Temple. And then we also have Sai Kirthi Manasani. She's a 2021 Spencer Angela Sabatino Scholarship recipient, and that's actually she's our first ever recipient of the Angela Sabatino Honorary Scholarship. Some of you might be familiar with Angela. If you're familiar with Spencer, I find it hard pressed that you wouldn't know Angela. Angela retired last year. She was with Spencer for 35 years. If she is watching or hears me and I get that wrong, I apologize, Angela, but she's been a longstanding member, and so we had this scholarship in her honor, and Sai was the first recipient of it this year. So Sai is entering her senior year at the University of Connecticut. She's studying actuarial sciences. Sai is currently an actuarial intern at Aetna, and she's previously interned with Cigna, Milliman, and Mass Mutual. She's also part of the University of Connecticut's Actuarial Science Society, and she recently received the Actuary of Tomorrow Award. So congratulations to Sai. And then, of course, we have our distinguished Funding Their Future honorees. We have Peter Garvey. He's vice chairman of Galway Holdings, a position he has held since January 2021. Having previously served as CEO of Epic Insurance Brokers and Consultants. Galway's retail insurance brokerage subsidiary during the firm's expansion from a California regional broker to one of the largest national brokers. At the holding company, Pete's responsibilities include the group's insurance market relationships and strategies, international expansion plans, and several pan-Galway product development and organic growth initiatives. Before joining Epic, Pete was co-founder and CEO of Integro Limited, a multinational specialty insurance broker launched in 2005 with deep expertise in the complex and large risk market. Prior to Integro, he spent 25 years at Marsh & McLennan, where he ultimately held the positions of CEO of Marsh North America and co-president of Marsh globally. So thank you, Pete. We're very happy to be honoring you and happy to have you here today. And then, of course, we have Mary Roth, and she is the Chief Executive Officer of the Risk and Insurance Management Society, also known as RIMS. Mary joined RIMS in 1985, and since that time has served in such roles as Assistant Director of Research and Director of Membership and Chapter Services. In 1999, she was appointed Deputy Executive Director, in which she played a key role in managing RIMS headquarters and staff activities, including elements of the budget and working to keep the society moving in accordance with its business strategy. In July 2004, she was named Chief Operating Officer, and in October 2004, she was tapped to lead the society and continues to serve as CEO. Additionally, Mary is a past chairman and current director of the International Federation of Risk and Insurance Management Associations, and she also sits on the Insurance Industry Charitable Foundation New York board, and is a member of the International Women's Forum. So Mary, I think you're quite busy. I think you have a lot on your plate, so we're very happy to have you. And she was also featured in the Business Insurance Magazine's 2006 Women to Watch. So thank you all for being here. I mean, the accolades are endless. We're so lucky to be honoring you both and to have Sai and Kurabilla here today. It's going to be a great conversation. We're very much looking forward to it. So the first topic of discussion that we have today on the roundtable is the future of risk management and insurance and kind of what to expect down the line. Obviously, a lot has changed in the last 2 years with the pandemic and working from home, technology growth. So we want to discuss a bit about that. But before we do, we're going to launch a poll. And we are just curious to see where everyone is that's attending today, how far along in your career you currently are. So are you a current student, professional that's been in the industry for a long time? It will give us a good sense of where this conversation, how we can lead this conversation. And hopefully we have a nice mix, but we expect to have quite a bit of, a lot of students, but it's nice to see a mix. Okay, so we have a lot of experienced professionals today. So maybe you'll have some good questions for us too.
Thank you, Christina. So we'll get into the questions with the go-ahead. So the first question that I have is that, what are some emerging risks you're seeing coming out of the pandemic? How do you think the workspace will look post-COVID?
Well, I can first, Mary. Go ahead.
Sure, I can jump in there. I think we've all experienced a lot of change in the past year and a half or more. But I think what we're going to see will be a continued heightened focus on supply chain issues. We're going to see, as an emerging risk, mental health and stress concerns, not only with our employees, but in general with the workforce. I think we'll also look at, in addition to the mental health issues, we're also going to be faced with a lot of physical post-COVID health effects on our workforce and the return to work of those that have been impacted with the virus. I think with the virtual office space, we're going to see a lot of ergonomic issues as a key risk coming down the pike. And as organizations continue to embrace a virtual office environment, that's just going to increase if we don't put in the proper training and education of our employees. I also think that there's a risk that innovation will suffer. When we move to a more virtual office, are we impacting the collaboration and the workflows of our organizations if we don't properly manage to that? And I'm sure Pete's going to bring this one up, and I'm sure everyone on the phone is going to be quite in tune to the talent risk that we're going to have in this industry. And not only because of COVID and people probably looking to retirement earlier than they normally would have, but also, you know, are we developing enough talent to serve our industry? And, you know, people may also choose to leave the workforce for lifestyle changes and health impacts. So that's a little bit of what I'm seeing. I guess I probably covered a lot, Pete, of what you wanted to cover. But that's kind of at a high level where I see some of the big challenges moving forward.
You did cover a bit on the risk side, but that's what you do so well. Where I worry about it after the risk isn't managed so well, you need to transfer it in a brokerage role. So maybe I'll touch on a few of those. Coming out of the pandemic, a few of the results in the market are that the availability of useful pandemic coverage is nil. It's hard to get. That may change. There's a few products now of limited cover for pandemic that isn't worth paying anything for. It's pretty limited in scope and breadth. So, you know, industries like the live event business is coming back, but without pandemic cover and without a lot of, and it's 4 or 5 times the price, and it's not covering the artist's profits and a number of other things. So the restrictions of cover particularly in the industries where the pandemic caused a total loss across all policies are going to be really, really slow in coming back, and in a much more limited and far more expensive way. And that's going to hamper those businesses. So that's a result. I think we can probably count on the plaintiffs bar already designing coursework in litigation for maybe not the areas that the government has given them hold harmless, like the vaccine manufacturers, but everybody else who was involved in the process, particularly in the area of treatments. And some of these treatments, I think that we're going to see a spike in claims, or at least claims activity, litigation activity. I think you can count on all sorts of claims being made by the plaintiffs bar about holding people responsible for long-term COVID syndrome in some way. And I think that's going to carry on in class action environments for years. And I do think, given that everybody ended up working remotely, and a lot of them, everybody who could certainly, and a lot of them kind of like it and want it to stay that way. I think we can count on employment-related suits around return to work rules, from everything from, are you barring me from my workplace? Is my career being held back because I'm not vaccinated? I am vaccinated, by the way. I didn't mean me, but are you, you know, are you giving an advantage to somebody else to the extent you let me work remotely, and now you are ordering me back and my career is left behind? You could just think, damned if you do, damned if you don't, if you're an employer, about what your rules are. If you move to Montana when your job's in LA while we were shut down, you're going to be expected back at work, or maybe bear the cost of commuting to work from Montana to Los Angeles. You might, you know, there's all sorts of things you can imagine, which just makes being an employer suck even more than it did before from that standpoint, in terms of employer liability. So as far as workspace post-COVID, you know, it's hard to say. You know, it certainly is somebody operating a business. It's usually unwise to make long-term decisions about how you're going to operate right in the throes or just out of a relatively short-term aberration sort of event. So we'll see over time, but certainly, as Mary touched on, the talent drain is pretty scary right now. If the surveys are to be believed, that, you know, something like some astronomical number, over 40% of people don't plan on going back to work or back to the job they had before, or in the job they had before, retiring early, all those other things. So we're beset with that. And that was already a problem because, at least from the insurance company and brokerage side of the equation, these firms are aging out, and we're not attracting enough new talent. Again, commercial for Spencer. That's why Spencer's so important. Send your checks in, you experienced people who have money. to send them in, double the size of them. We need to support the careers of young people and attract them to our business in every way we can. I think in terms of the space itself, I think there'll be less open office space. We'll go back to offices from the open plans. I think there'll be more of that. There certainly will be more accommodation because of the talent drain of remote working. From the business perspective, these things are always trade-offs. A lot of businesses are seizing the opportunity here to reduce their real estate costs. So they'll go to remote work. They'll allow, remote working to some degree, 1 day a week, 2 days a week entirely, and they'll get rid of the office space that's unoccupied. So anybody who thinks they can work 2 days a week and still have a private office is out of their minds. That will be hoteling. They're not going to be able to keep their stuff there if they go that route. So you may have to schedule the space in advance. It may be prescribed days. I think it's not going to be the kind of nirvana that people think about. They can come and go or work as remotely as they please. And over time, we'll find out, is there a loss of productivity or not? It's just too short term for now.
Can I just add also, I think there obviously is opportunity with more of the virtual options in that you're not now contained to hiring people in a single location, which could allow for a more diverse workforce where you may not have been able to attract that diversity. So I think there's opportunity, going to a virtual environment. And as Pete said, I think we're going to see more flexible hours. I think we're going to see more flexible work weeks. I think people have become used to that and are going to be expecting it. If you want to retain that top talent, I think we're going to, back to what Pete said, we're going to have to make accommodations for that. So I think I'm up with the next question.
Yeah, Mary.
And this is
for our scholars.
This is for our scholars. So we're looking to you for some insight on what you think environmental, social, and governance factors are going to play. Do you think they're going to play an increasing role with risk and insurance professionals, and why? So is ESG going to be, critical to you all as newcomers into the workforce?
I can go first. I think it already is playing a big role right now, especially with in the insurance side. My internship experience has taught me that ESG has been slowly becoming an underwriting criteria in certain cases where certain risks are heavily scrutinized for their operations if they have anything not in terms of the environmental side particularly. And I think the biggest takeaway there is that we're mitigating this risk now, or at least we're trying to see what we can do with this risk now so that we won't have to deal with long tail claims later on down the road. And also, as in this industry, there's many generations of people, and as you see the younger talent come through, we have an increased focus on ESG. You can see that in other industries as well, and I think insurance is also shifting towards that. But yeah, the biggest takeaway is that we want to mitigate this now, or try to plan ahead now so that we can reduce the uncertainty later on. The last thing we want is pollution or asbestos cases back in the 80s and something, a repeat of that relating to ESG. So in the ESG, particularly the environmental is a high focus, as that's what I've seen from my experience. But Sai, if you want to add on to that.
Yeah, of course. Having only interned at life and health type companies, even I've heard a little bit about ESG, which I think speaks to how important it is for us as young talent to kind of be informed on those topics. And I definitely think we're going to see an impact. Just being someone in this industry, we've seen greater severity storms just in the past year or so with wildfires, more intense hurricane seasons and things like that. So I think, climate change as a whole is going to be a worldwide issue, but definitely impacting insurance professionals. Working in the health space, we've seen that we've been in uncharted territory per se with this pandemic. And I think it's the same thing on the P&C side, but with climate change and all these environmental factors except, that's going to be happening every year. It gets worse. So P&C insurers, especially being in uncharted territory for such long amounts of time, it's interesting to see what kind of factors are going to come up and how difficult that's going to be to navigate it. I'm definitely particularly interested in seeing how they're going to model these events and what our insurers are going to do to try and combat that as well, especially since they take on a big responsibility with this topic.
Yeah.
I mean, can't deny that things are shifting, things are changing, and it is becoming more important to younger people, right? Not to say it's not becoming important to everybody, but you can't ignore it. It's, environment, climate, it's all changing. So we lost Pete. I'm sure he'll be back.
I am back.
Oh,
Sorry.
there he is. We have to find you now. Oh, there you are.
Okay, next question. Is it ready for that?
Yeah, we can. Yeah, okay. We can have the next one.
For the scholars. So how do the two of you see technology impacting the insurance industry and or the practice of risk management?
I think technology has already been changing that landscape because we're having this meeting online, and it's a part of risk management. I think that we've learned how to adjust how we do things, and we've needed to. So, I mean, insurance has become more seamless with technology. I've seen my managers talk about how technology has improved their claims payments or having the ability to service clients better, having a better underwriting process, better quoting process, and ultimately just a more efficient communication. And that allows for better risk to be selected in the long term. I think Sai can talk more about this, but in the actuarial side, loss modeling and data analytics has played a huge role in how we see risks and how we select risks. So having that technological advancement has really been a game changer, I believe. And using that data, we can extrapolate better to the future and understand how risks work better.
Yeah, and I think from the actuarial side, data science and automation have seemed to become such big topics that younger actuaries have to be focusing on. We actually recently saw the Society of Actuaries, who administers our actuarial exams, change the exam structure so that there's more emphasis on predictive analytics type topics. And that is something that has signaled to me, that data science especially is going to start becoming a bigger part of insurance companies and also risk management, especially in upcoming processes. I think the great part, though, about incorporating technology more is that risk management professionals are more at the forefront of making those business decisions instead of, being in Excel or R or any kind of program, all day, which it's great because people that are younger are coming in with a lot of different technical knowledge, but, after you've gotten experience, you're really able to make that impact and make that change on the industry as a whole.
Yeah, and as the younger generation comes in, we're kind of used to using a lot of technology at our fingertips, and I feel like we can adapt to this new formats, new software, and then go with that. So I mean, we kind of see it as a standard, I guess, that we use the technology 24/7. So I think it'll definitely continue to impact the insurance industry.
Yeah, just one last thing to add on is I think a couple of years ago, someone that's starting out could have come into the industry with just baseline Excel knowledge and, be good, but it definitely has changed now with different programs like R, SAS, and all these kinds of things becoming prerequisites almost to working in this industry.
All right, that's great.
Okay, I think it's my turn for the question. So to the honorees, aside from COVID-related changes, how do you believe risk management insurance will change in the next 5 to 10 years? And also, how do you think students entering the field can be equipped and ready to adapt to all those changes?
Go ahead, Mary. Risk management is the first part of the question.
Okay, well, I think they already covered one of the big key things that I think are going to be the changes, which are the use of new technologies and streamlining processes and the management of risk and insurance placement, et cetera. So I think you guys covered that quite nicely in your response to the previous question. But I also think, and maybe this is a self-fulfilling prophecy or something that I've strived for in my entire career at RIMS, but really heightening the engagement of risk management at the C-suite and the board level, the understanding of risk management, the importance and the value of risk management to the organization. Also, I hope to see in the next 5 to 10 years that risk management is one of those key business functions that are required within any organization as a business enabler, and that, you know, it's not even a choice. It's you need to have a risk management program, process, professional to work with your organization to make sure that they're a success. And I also, you know, believe that in our time in the next 5 or 10 years, that risk management curriculum will be a baseline piece of knowledge that will be gleaned in any business program or MBA program, as well as in board development. When you look at organizations that train future board members, risk needs to be a component in that. So that's where I see some of the change in the next 5 to 10 years.
Yeah, I mean, I just following briefly on that. I mean, it's the challenges of the larger scale of risks in general, new and larger risks in general, that's transforming risk management. Completely agree with you, Mary. Risk management has to be one of the biggest concerns of any chief executive or board member. The larger the company, the larger the concern, because these risks that are getting bigger and bigger won't be able to be transferred increasingly, or won't adequately be transferred. So you know, it's just incredibly important. The trade-off there is people who want to go into risk management are really going to have to up their game to be able to address all those ever more complex issues. So once again, we're back to getting the right talent into the business and all sides of it. On the insurance company and brokerage side, there's a couple of trends that have been going on for a while and only continue to accelerate, and they're going to be changing just for a couple of reasons I'll outline. Those two broad scale changes in insurance companies, and particularly in brokerage, which I know better for obvious reasons, is the kind of space race, if you will, of gaining scale. I mean, scale has always been to some degree important. It's ever more important now because the barrier to entry is much higher. For brokerage, it used to be pretty damn low. You know, you just need an insurance company appointments and a telephone. But now you've pretty much, you know, you need some significant capital. You need, the cost of compliance and regulation has soared. The need to invest in technologies, the need to invest in data mining and analytics, the need to do all these things that are very expensive, and the cost of talent to do all those things is much higher. So chasing scale has become a major trend in game. And while I don't, you know, I hate siding with Aon, but I don't necessarily agree with the DOJ's move. I'm kind of happy they did that, not being one of the top 2 brokers. But you know, it's scale is necessary in our business, and that's going to continue. The problem with that trend, and the thing that's changed, is because there's so much capital chasing the space, and again, particularly the brokerage space, there are very few targets left to acquire. At the pace of acquisition in the US alone, right now, and there are, like, you know, plus in addition to the big public firms, there's relatively few private firms, and they're not funded by outsiders. And there's relatively few bank-owned firms. In fact, only one I can think of anymore. But the rest is backed by private equity and alternative asset management, and in applying relatively inexpensive capital, at least for now, is the game for them. So everybody's chasing relatively few assets. The price and terms are ever more beneficial to sellers, and firms you never thought would sell have sold or are selling. And at the pace of acquisitions over the last 3 years, there's about a 2.5-year supply in the United States of insurance agencies and brokers to purchase. And that's of firms with greater than $1 million of commissions. So, and $1 million of commissions could be one producer. So that, really it's shopped out. So the trend in brokerage you're going to see is looking for new ways to apply that capital, branching out into other businesses, certainly investing in InsurTech. We do. We have a venture division, investing in a lot of other areas, which in fact are positive for the business as a whole, but maybe even getting a little further afield from insurance. You're going to see more of investing beyond just insurance technologies. I think you'll see a lot more of that soon. And that overlaps with the second major trend, which is technology. And if you follow the money, some of these valuations of firms that they're relatively new ventures, they don't have much revenue, they're tech firms. They're trying to paint themselves as tech firms. They really aren't yet, because the technology in the insurance and brokerage space has really only been successful so far in some raw distribution applications, mainly on the low end and the commodity end of the market, mass market personal lines, small commercial businesses, where the complexity of the design is not that much. The number of permutations are not that many. So it really hasn't graduated beyond, sort of the low end distribution, and the ones that are taking on Geico and State Farm, not the ones that are chasing the larger commercial space and specialty markets. That'll come and that'll happen. The other tech applications that are working are internal operational efficiency improvement applications that are internal to the companies. And the third, as everybody mentioned, are the technology applications that are helping to improve data mining and data analytics, and those are fairly successful. Artificial intelligence in the underwriting space and elsewhere is not off the ground yet. There's a lot of people trying it, a lot of people saying nice things. Eventually, I'm sure they'll get there, but that's not where the successes are so far in replacing underwriting and a number of other things. Certainly, delivery of submissions, the quoting side of it, and those other things, there are applications. There are barriers to that. Every insurance company, you can't get into the insurance company with your applications, and brokers aren't going to take on 50 different software methods of inputting solutions to appeal to each carrier. So there's still a lot of work to be done before that takes off. I'm not sure it's within 5 years, but the pace of change has always dazzled me over a course of my career. So we may see that in the near future. As far as the what can you do to adapt to those changes? You asked that question, right, Si? Did you ask? Yeah, okay. Adapt to those questions. I think, as Mary and I have both talked, you need to be prepared for this. You can't fake it like I did when I went into the business and barely could spell insurance, knew nothing about it. You really have to have skills coming in, not necessarily an intimate knowledge of how the insurance companies work or the brokerages work, but you need to strengthen your skills and training in finance. You need to know how to read a P&L and how to read an income statement and sort of understand the flow of funds and things like that. You ought to have a basic understanding of engineering, statistics, computer science, and a number of other areas. It's far too sophisticated. And I think as a consequence, you're going to get paid them a lot more down the road. We've already sort of accepted that. I think every firm has accepted the fact that salaries and incentives need to go up to attract the right people. And I think every company is prepared for that.
Can I add on? Of course, you need to join RIMS and get involved.
Yes.
So I wouldn't be the CEO of RIMS if I didn't state that you will get so much information traction and develop those key relationships by becoming active with RIMS. Get outside of your wheelhouse. You may be an actuarial major or a risk and insurance major. Don't stick to that, that finite path that you're looking down. Expand your horizons as you get into your next step of your career. obviously continued learning. Risk management is not static. Insurance is not static. You have to continue to learn. You will not walk into your job and be in your job for 1, 3, 5 years and think you know it and know you know it all. Things will continually change. Obviously, relationships are very important to your future and your growth. And if you can engage a mentor, that really can guide you, not necessarily even within your own company, but outside of your companies, find that mentor who's really going to give you that great advice as to what your next step should be. And also challenge yourself. Take on that challenging assignment. Just don't do the things that you think are, easy. I know I can do this in my sleep. Really take yourself out of your comfort zone, because it will only help you grow and expand your knowledge and your faith in yourself, and your expertise to get outside of that career path that you've developed for yourself.
That's great advice, Mary. Couldn't agree more. Thank you so much, everybody. We're getting some questions in the chat, so thank you for everybody who's putting those questions in there. We'll try to get to as many as we can throughout, but one that I think stuck out is from Francis. Francis, if you have anything to add to your question, feel free to unmute yourself, but we have, sticking with the ESG theme, would a company's performance on ESG affect your desire to work for them? And that's for our scholars, that's for Sai and Kuravilla. So do you think that will affect your desire to work for a company, how they approach ESG?
I think it definitely will, because a company that focuses on ESG is a forward-looking company, and that's where I'd like to work at. Their culture would be different from other companies that aren't so proactive about these things that are emerging risks, and they're focusing on other things that are not ESG. So you see this shift going on, and we have to be a part of that, because that is the future. And I think that people my age and millennials or Gen Z and next generation coming forward are going to be more in tune with that line of thinking. And even if the company doesn't focus on that, as the new talent comes in, the perspectives are going to change. And as we fill in those leadership positions, we're going to definitely change that as well.
Yeah, I'm just going to echo all the thoughts that Kuravilla said. Pretty much the same thing here.
Yeah, it's important. It's important to like the workplace that you are at, and that you agree with their ethics, and that's changing, right? That's ever changing. But that leads us to our next topic, which is, how do we attract new talent to risk management insurance? What incentives, what can we do to help young people want to enter this industry? So Rachel, if you don't mind throwing up our next poll, and that's, which of the following attributes of RMI is important to attracting new talent? What do you think is going to really, stick out and be in the forefront to get people interested in entering the field? Okay, interesting. Obviously, all of these things are important, right? But it's the full package. You want all of these things. Okay. So upward growth, a variety, career stability, compensation, yeah, all important things. Okay, great. Awesome. All right, so like I said, our next topic is, how do we do this? How do we attract new talent? And what better people to ask than people entering the field? So we have our scholars here, right? Sai and Kuravilla, what are they interested in seeing? So I'll pass it over to our honorees.
Okay, so Sai and Kuravilla, what are some of the aspects of the industry you think need to change to be more enticing to younger individuals? And what's important to you in a workplace as you begin to look for your career out of college?
I think I'll go with the first one for, so one of the main things that attracted me to the insurance industry was that I knew some people that were in it, and they kind of talked to me while I was in high school, and they kind of, made me understand what they do for a living and how it works on a very fundamental, high level way of explaining things. And that got me interested. And, I joined Temple. I went to, the introduction to risk management class. I really liked it. Now we're here. So, but I think the point that there is that I didn't know such a major really existed. I didn't know that there was like this whole industry, this whole field that existed. So much more, I don't want to say like advertising, but much more like awareness of like, and I think Spencer's doing a great job with, having that awareness, but much more awareness in terms of like, hey, we have this great major, we have this great industry, we have so many roles in it. It's not just underwriting, it's not just being a broker, it's not just, claims. There's so many other different paths you can take in that, and explaining to students that this is a viable path. You can, much like finance, much like being a lawyer, much like being an engineer, whatever they want to do. So this is like an equivalent, major role that you can play, and you can give back to society your values in that. So I think creating more awareness on such things, and even that can be like one-to-one. Like you can just take a proactive stance about it, reach out to people that students that are upcoming. But I know Temple is a big hub for risk management insurance. We have the Sigma chapter, and Spencer. We have a great relationship with Spencer. But in other places around America, it's not as aware, I guess. And I see that from the speakers that are speaking before, and we should make it more aware that this thing exists, and we should captivate the interest of these new students that come in. Yeah.
I completely agree with that. I didn't even know actuarial science was a thing until I got to high school, and the only way I really knew what it was both my best friend's parents were actuaries. So then I got to talk to them, and they were like, hey, you're good at math, you might want to look into doing this. And so that was even after my dad, who had worked in an insurance company, had exposed me to all these kinds of things. So I think like reaching out to people that are in high school, because it seems like we're making our decisions about what we're going to major in and what we're going to go into earlier and earlier as the years go on. And I think like one way we're doing that through like UConn Actuarial Society is going to high schools and talking about like the coursework that we do at UConn and all the career opportunities that you have after you major in risk management, insurance, things like that. And as for what I kind of want out of career or job full-time opportunity is just like that variety of experiences. I've interned at like 2 or 3 places that have rotational programs, and I think that that has been such a great experience for people that are in the program once they start out, because they're getting this variety of experiences right off the bat that, kind of touching on what you said, Mary, just like expanding your horizons and not limiting yourself to one department or one career path, and seeing all the places that, actuaries, risk management professionals can delve into and impact has been a really big thing. So any company that is putting an emphasis on building talent that way has been something that's really appealing to me.
That's great.
Yeah, and then one thing that I would look for in my workplace would be like the impact of mentors, because I've had many like professors or many older people that have like reached out to me regarding my path in insurance, and I've gained a lot of knowledge from them. And as a college graduate entering the industry, we don't have much experience other than 1 or 2 internships and what we learned in class. So having that person there to guide you, having that sense of community in your team, and being able to work with that team and going forward, it goes a long way. And I think that'll make people want to stay with that company, because then you start to make relationships when you know them on a deeper level, and it's not just like, oh, they're my work person, or like it's more, okay, I'm their friend, or like, we're a kind of a community team, and that's definitely going to make people want to stay longer at the company.
Yeah, I agree.
I think we've almost touched on our next question and your answers to this current question. But if you had 2 minutes in an elevator with a future risk management and insurance student, why convince them? Why should they pursue this profession? 2 minutes, and make it, it's your first attempt at an elevator pitch, so now you're trying to convince someone who you want to come into this world, not necessarily explaining to someone what you do at that point in time. So how would you convince them?
I would convince them saying insurance is the grease of the economy. It keeps the economy going. It gives entrepreneurs and investors and those who wish to make changes in society an assurity through risk transfer and risk management. So it provides safety in unprecedented times and resolve for clients that are adversely affected. It is a people-first business, and it continues to change with the influx of new talent entering the industry. So if the person wishes to make a difference in the world, I think they can with their job. It provides great benefits. It's allowing for a new influx of talent coming through, which is changing the insurance industry for the better. Technology has had a great impact on the industry, and we see that it has become a priority for new professionals that are entering. But yeah, I mean, I'd go back to being that mentor kind of person for them, and wouldn't stop at that 2-minute elevator conversation. I would keep in touch with them and advocate for them if they needed anything from me.
Excellent.
Salesman, Kerrville.
Yeah.
Bye.
Yeah, Kerrville really touched on everything, but I think the biggest things to stress are that the industry as a whole is an ever-changing environment. It's something that you're not going to be bored in, because there's so many different possibilities and career paths that you can take within it. And so you'll be able to rotate, you'll be able to do things that are changing, as just like we were saying with the next 5 to 10 years, we're not even able to predict what's going to happen in the next 5 years, let alone, a 40-year spanning career. And on top of that, it's just such a stable career with upward growth and mobility. Making these connections at such an early time is so helpful. And lastly, you can be confident in the fact that you're helping people. Insurance itself is helping protect people against some of those more catastrophic risks, and to be there for those people in some of the hardest times is something that, provides me value every day when I go to work.
Well, that's nice to hear. But I agree, Sai, right? It's never boring. It's ever changing. It's never boring, right? That's great. So I think for the just being aware of everybody's time, I think we're just going to skip to our next topic, which is our last topic, and maybe we can even merge these questions together for our honorees. But our final topic is, we looked at how the RMI industry is going to change. We looked at how we might attract talent into the industry, but the next topic is what advice do our honorees have for these future leaders that are entering the industry? What would you recommend to them? What's some of the best? Now, maybe you give your 2-minute elevator speech in a way, but I'll hand it over to Sai. Maybe you can wrap us up, and what's an important question that you would ask our honorees that could give you some really great advice on when both you and Kerrville are graduating. Oh, here's a poll question Rachel just put up. So she's asking the audience, what's the best advice they think they would give to anyone starting their career? But let's see what people are saying. Ask a lot of questions, seek out mentors, which is something you both mentioned. Mentorship is incredibly important, right? Take risks and be open-minded. You're asking risk managers to take risks? What are you doing? That's great. Okay,
Yeah, great responses. I can ask my question. So a lot of us will be entering the risk management insurance industry in the next year or so. What's something that you wish you knew at the start of your career that you know now? And are there any skills that you aspire to see like more people have in our industry as we're entering it?
Yeah, so as I said before, I probably could have benefited from anything, any information about the insurance business when I entered it, since I started with zero. But if I were to pick the biggest item, and maybe from the 30,000 foot level, I wish I knew how fragile the status quo is, and how change is a constant, and the pace of change is always accelerating. So what you see today and what position you enter is going to be different 6 months from now, a year from now. I think I mentioned to the two of you the other day, when I started in the business, of the top 10 insurance brokers, Aon wasn't even Aon actually didn't exist when I started in the business. Some of their predecessor companies they acquired, of course, did, but they didn't. Of the top 10 insurance brokers today, only 2 of them are still on the list. One was about to be acquired until, a week ago. And then the other eight others don't exist anymore. So, that is in 40 years time, but even going back 20 years, there's nearly the same sort of reflection. And the same could be said of insurance companies. Now, I'll preface this by saying I was not the proximate cause of this happening, but in my first 3 years in the business, when I was an underwriter, I worked for 2 companies and both of them are out of business. So that, those things do change. I mean, AIG wasn't even in the top 5 of insurers. Of course, they slipped off and they'll come back, of course, but through most of my career, they were number 1 in the commercial space. Those things change rapidly, the types of jobs, the types of disciplines needed. Just the displacement of market leaders in the structure of the business is always going to happen, and probably going to happen more rapidly, because the movement of capital used to have a lot of friction to it. Used to take about 2 years to start a new company. When Bob Clement started ACE, which of course today is bought Chubb and changed their name. When in '85, when he started that, it took about 5 years for ACE to actually be an onshore insurance, property casualty major insurance company. Today, you can do that in 90 days. You can go from being offshore, buy a little reinsurer, amass your capital somewhere, buy licenses in a number of countries, hire underwriters, hire some businesses. You can do that very quickly. So displacement is near immediate, and technology enables all sorts of new product services and offerings. So if I were to enter the business today, I would keep an open mind about I'd always be thinking about what my next job is. Nothing against Marsh, but I would have never stayed there 25 years. So looking back on that, there's just too much opportunity, and there certainly will be going forward.
And I'll just add, I wish that I had known that there was formal risk management and insurance education available, and that it's a viable career. I think you kind of touched on it. We need to get to those high school students that are making those future decisions for themselves when it comes to college planning. And also that it's a financially promising career, as well as exciting and always interesting. I mean, from the moment I stepped into RIMS, what I heard on a daily basis from our board members, from our members, from our staff members, just is interesting and keenly keeps you on your toes. And it's ever changing. And you'll see something one day that you never dreamed you'd be seeing in your lifetime, and now it has come to fruition, and you've had to deal with that risk. And back when I started at RIMS back in the mid '80s, or late '80s, was a hard insurance market. There was issues with insurance availability and affordability. Some of the first projects I worked on. And I wish someone would have told me back then that a hard market would return, which we're all, sitting in the middle of right now. I mean, we've had a pretty soft market up until the last couple of years. So what comes around goes around. But, I think if someone really sat down and explained to me how wonderful this business is and how wonderful the people are, when you work for a membership society, and how much people give to sharing with others, to elevating everybody else in addition to themselves, has been just an amazing environment to work in. And, you know, Spencer, developing the future of this this profession and all of the various facets is key to making sure that we continue the legacy of an amazing profession and career.
Thank you, Mary. I mean, I totally agree. It's so nice to see it is a community. I mean, everyone is so nice and it feels very supportive, especially of Spencer. Obviously, RIMS and Epic, not only individually, both of you are so supportive of Spencer, but company-wise as well. So I want to ask one last question of this, guys. We had a bunch of questions in the chat, so thank you everyone for asking them. I'm sorry we weren't able to get to all of them, but it's nice to see everybody so interested. And you know, this was such a great conversation. But I think this is a fun last question to end on for our scholars. This is from Carl Sincata. I'm sorry, Carl, if I'm pronouncing your last name incorrectly, but going back to the idea of mentorship, which is so important, right, in the sense of community, he asked for the scholars, as younger employees starting out, how do you effectively build your meaningful work relationships when we're working in a remote environment right now versus face-to-face? So how do you develop those mentorship relationships, and what value do you look for in developing those relationships in the current climate that we're in right now?
I think you just got to be proactive about it. You have to get on people's calendars. You have to like reach out to them. You have to take the initiative. Like just today, I had some calls with managers, and we had it scheduled, and then it was like, you know, he suggested a new time, but then like I didn't see it, but then I reached out to him, and like you're taking on the initiative, and like, you know, he really appreciated that. So just to avoid any confusions, you know, so having that mentor relationship is a back and forth. It's not just the mentor giving you advice and experience. It's a mutual relationship, and finding the right people for that is very important. And you know, the more network, the better your network is, I think the better people you're going to meet, and then you're going to find that right person or people. Many people, they're going to help you in different seasons of your life. So but yeah, I mean, in the online environment, contact them however you can. Technology is at everyone's fingertips, so everyone has a phone. I hope everyone has an email. So you know, you have to take that initiative maybe at first, but then once you have that established, then you can have a little back and forth. You know, schedule meeting times, etc. Meet up with them. Ask them to invite you to different things that might be useful for you, and yeah, go from there. So.
Good. Yeah, you got to be proactive. You have to be a go-getter too, right?
Yeah, I completely agree. I think discipline is a big part of like a mentor relationship, just having that drive to kind of set up a meeting bi-weekly or monthly or however many times. And also doing like the small things, like turning on your video when you're in the remote environment, just to kind of figure out, you know, what are their intentions? Are they interested as well? Kind of gauging that and not being afraid to kind of reach out when you have the smaller questions too. I think like that constant communication has helped me feel like we are face-to-face. And I try to talk about things that are, you know, outside of the pandemic as well, so that once the pandemic is over, just being able to maintain that relationship in that way.
Yeah, and one more thing I'd like to add on is that, you know, in my college time, being a member of Gamma, we had these mentor sessions where there was student to student or alumni to student, and many of these people that I've contacted have helped me prepare for my internship, prepare for a reception, prepare, you know, just going to the career path, and I still have contacts with them today. And, you know, I like to thank Gamma for that opportunity. And I think that if we focus on, you know, and especially in college and high school, the younger, the better, that when you practice that discipline, like Sai said, you realize the importance of mentoring and the importance of networking. But yeah.
Yes, networking is a big one, right? And take advantage of all these opportunities, RIMS, Gamma, Spencer, all of these amazing resources. You know, contact Rachel, she'll help you with programming. Talk to Megan, talk to Mary. Everyone is so welcoming and so willing to talk to you, right? To give you a little bit of advice, to get some time on the calendar. So definitely networking is a big one, but we went a little bit over, but this has been a fantastic conversation. I want to thank Pete and Mary. Thank you so much for being a part of this chat today. It's so nice to get to chat with you. And thank you to Cy and Curvilla. You are such amazing additions to the Spencer Scholar family. And we're so excited to see what you're going to do in the industry. I'm sure wonderful things. And thank you to everyone for coming today and for asking us questions. And please visit our website. You can learn more about Funding Their Future if you would like to donate to help grow our programs, keep giving out more and more scholarships every year, growing that talent pipeline. That's the goal, right? So thank you, everyone, again. It was so nice to see everybody, and have a great rest of your Tuesday.
Thank you.